banks. Okay, so this is something that home buyers have to go through, and it's called a stress test. What is it exactly?
Yeah, so as basically from 2018, the way the banks started qualifying home buyers was that um, in order to qualify for a mortgage, you wouldn't qualify under the actual interest rate. You would pass through what they call a stress test. So basically, what this is a simulation the banks do in order to qualify home buyers in the event that interest rate goes up in the future. So let's say today's rate was 2%. You wouldn't actually qualify at 2%. It would actually qualify you at 4.79 in order to kind of know in advance if you can afford the mortgage in the event that interest rate rises.
Okay, so what about for those who are renewing their mortgage? Do they need to qualify all over again?
So if you're renewing with the same bank, you do not need to go through the stress test again. You would have to go through it in the event you were to change financial institution or if you would try to refinance.
Okay, so run down the new change with us, Nick, that took effect this month, in fact, right? So what happened?
Yeah. So basically, as of this month, in an effort to somewhat slow down the real estate market, they've increased the qualifying rate. So instead of getting qualified on 4.79, you would now have to qualify at 5.25. So it became a little bit harder to qualify for the same amount of mortgage. You would actually lose about 4% of buying power. So even though you're paying around 2% today, you would actually need to get qualified on 5.25, which would make it slightly harder to get a mortgage of the same amount.
So would that mean then you have to be ready for a bigger down payment?
Well, let's say you had a budget of 500,000 and now, with the change, you can only get 475. You would have to come up with a difference probably in cash to afford the same amount of money, as if it wasn't already hard enough to buy a property these days. It just unfortunately became slightly harder.
Yeah. Okay, so why the change?
Well, I think what's going on is basically the real estate market is way too much on fire. They're trying to slow it down, although it doesn't seem to be working. Another reason is, Canada wants to kind of control the amount of debt people are taking, and they just want to be cautious in the event interest rates do go up. They just want to make sure people can afford the payments in the future.
And the rates are still relatively low right now, correct?
Yeah, the rates are still playing around the 2% plus or minus. So the interest rates are very favorable to buyers. So, it's still a good time to kind of lock in a mortgage, definitely.